This is your LMAX exchange technical update for Wednesday, October 26, 2016. Euro dollar. So the euro appears to be showing signs of bottoming out after the market established below 109 the other day. At this point, though, the pressure remains on the downside, and since breaking back down below 109, it seems that any upside is corrective, with any rallies expected to be very well capped ahead of 111 in favor of continued downside towards next medium-term support at 105. Sterling dollar. So cable has been in the process of consolidating off those recent 31-year lows down around 120, and the pressure still remains on the downside. At this point, if we do see any rallies, they're expected to be well capped below some previous support, now turned resistance in the 128 area. Dollar yen. So dollar yen is showing signs of wanting to push higher, breaking a longer term downtrend, but the market has been unable to really establish above some previous resistance around the 104.65 area. We need to see it close back above 104.65 to really put the pressure back on the top side, and until then there is risk for another topside failure and bearish resumption. Key support right now comes in around 103.16 with a break below that level to affirm the bearish outlook and accelerate declines. Euro Swiss. Euro Swiss continues with its choppy consolidation over the past several months. Dips down towards 108 have been well supported, while rallies up towards 110 have been well capped. It's going to take a break on either side for a clear breakout. Aussie dollar. So Aussie has been well bid over the past several months. The market has been slowly trading higher, although we have continued to see some very solid resistance up above 77. At this point, the market would need to establish above 77 on a close basis to suggest that we could see additional upside, and until then there is risk for continued topside failures into 77 in favor of the next major downside extension. A break back below some medium-term support, which comes in around 74.40, would be required to strengthen the bearish outlook and accelerate declines. Dollar CAD. So dollar CAD has been pushing higher over the past few months, and the market continues to be highly constructive, making a series of higher lows and higher highs. At this point, there's risk for additional upside into the 135 to 140 area, with any setbacks seen well supported ahead of 130. Kiwi dollar. So Kiwi has been showing signs of topping out over the past several weeks since putting in a 2016 high back in September. At this point, though, the break below next key support, which comes in just ahead of 70 at 70.34, 70.35, would be required to accelerate declines. Any rallies, however, should be very well capped now ahead of 73. SPX 500. So the S&P 500 is showing signs of slowly topping out off record highs that were seen earlier this year, but it's going to take a break back below the September low at 2108 to confirm potential shift in the structure and accelerate declines. At this point in the interim, we expect to see consolidation with any rallies now well capped up towards the 2175 area. Gold. So gold is showing signs of potentially bottoming out now after seeing intense pullbacks in recent days. At this point, though, a close above 1280 will be required to confirm that breakout and accelerate declines back above 1300, potentially exposing a retest of the 2016 highs in the 1375 area.